Today I'm going to be updating some of my fundamental analysis on American Eagle Outfitter and cover Urban Outfitters as well. I want to start today's video with a comparison between American Eagle Outfitters and Urban Outfitters. I've been taking the data provided by Thinkorswim about these companies listed on the left, the Russell 2000 specialty retail sector companies, and I've been putting them into this Excel spreadsheet in order to compare them. And as you can see right away that Urban Outfitters actually has higher earnings per share and cash flow per share, free cash flow per share, and sales per share than American Eagle does. However, American Eagle is paying a dividend while Urban Outfitters is not. This means that American Eagle Outfitters, rather than invest in itself, is choosing to return value to investors, and I actually prefer that myself. I think American Eagle Outfitters has plenty of income to do both things. I'm not so certain about Urban Outfitters though. I'm going to scroll over a little bit and we can start looking at the profitability of these companies and compare their profit margins. So the gross profit margin for American Eagle is higher. Also an operating profit margin. Also a net profit margin. So overall, even though both companies are turning over their inventory at a similar pace and rate, American Eagle Outfitters is actually operating more profitably than Urban Outfitters is. And that's super interesting, especially when you look at the sales per share at $22 in American Eagle and $35 in Urban Outfitters. Now these per share ratios, these have to do with the free floats. So if I scroll over here, you can see that American Eagle Outfitters has a substantially higher free float or shares outstanding than Urban Outfitters does. So when I see American Eagle making more money and those relative values not exceeding twice that of American Eagle, this tells me that American Eagle is outperforming Urban Outfitters. So I'm still more bullish on American Eagle than I am Urban Outfitters. And that's just looking at these financial numbers. So per Thinkorswim, American Eagle has a long-term debt to capital at a percentage of 23%, and Urban Outfitters is at 0. And while it is good to be debt-free, newly acquired debt can lead to company growth. So this will give American Eagle Outfitters a leg up in expanding and growing their business over Urban Outfitters. Now, you can see that these are more price to earnings ratio, and this has to do with the stock price. So it looks like American Eagle might be a little more overvalued, if it is overvalued, than Urban Outfitters. The price to cash flow current ratio is also higher, and the price to book value is also higher in American Eagle. This means that American Eagle is trading at a higher premium than Urban Outfitters, and that makes sense when you consider that they're paying a dividend and the company is overall more profitable. So in short, I would say that Urban Outfitters is not outcompeting American Eagle, and that American Eagle is actually outcompeting Urban Outfitters, and that to me is so backwards from what the short interest would imply. All right. Here we have, first of all, let's note that the short interest on American Eagle is about 20%, which is quite high. I also noticed that BlackRock had to file a 13G because they own more than 12% or 10%, more than 5% of the company. They own about 12%. I think it's really interesting to see BlackRock owning so many shares of these companies that have high short interest. Not sure what the strategy is there, but I don't know. I'm not making any decisions based on it because I don't know how to use that info. Now, what I do like to see is that the insider transactions are actually share acquisitions in January. 7 of 8 of insider transactions were more or less bullish. Insiders are buying the stock, and that's what I want to see. We go to the Urban Outfitters, and the latest insider transactions were actually sales, and they occurred in November of last year. The short interest is lower than in American Eagle Outfitters. So again, I don't understand what the short interest is doing in a company that's more profitable. And why Urban Outfitters even purchased a restaurant chain, and that didn't make sense to me. I don't know how that's supposed to help the company which is mostly directed at retail sales. So I don't know. I am not super happy with Urban Outfitters when I'm comparing it to American Eagle. American Eagle seems to be the way for me. I'm going to pull this down now, and we'll look at some stock charts, which are pretty interesting. Now, I have American Eagle on the left and Urban Outfitters on the right, and boy, don't these look exactly the same. So I'm showing, let's see here, this is about early January to present, and you can see both patterns are coming in from a downtrend and now consolidating in an ascending triangle after finding a double bottom. It's uncanny. uncanny how similar these chart patterns are. I think that this is due to just the market volatility in general dictating which way these stocks are moving. I think once we have the earnings coming out on March 1st for Urban Outfitters and March 2nd for American Eagle, that we'll see these stocks make their independent moves, and then we'll see how they compare to the rest of the industry. So that's why I wanted to pull this up, just show how similar these two stocks are at present. Now I'm going to go ahead and blow up just one of these cells, and we'll switch this over to Urban Outfitters. What I currently have pulled up is the 50-minute chart with some trend lines, and when I start to see the trends making these kinds of motions where they just start teeing off a ton, this shows me that the price is just in consolidation. And this makes sense before earnings, especially given all the marketility and the big moves that these stocks have made. I do want to zoom out though onto the daily chart and try to describe what's going on here. The price is clearly in a downtrend, and it may even be a downward channel. We have one touch point here, 2, 3, 4, and then are these partial rises? Because that would be exceedingly bearish, right? But again, I don't quite have enough touch points to really identify either, but I did try to put the falling wedge over this chart pattern like I did with American Eagle, and it just didn't seem to fit anywhere. Not enough touch points there, not enough touch points there, and if I start up here, I can't make a comparable chart pattern on the daily time frame. So this makes me wary of the stock. If I don't understand how it's moving, I don't want to trade it. There's definitely a horizontal congestion region up here, and this would have been a high and tight flag, but it looks like it broke out bearishly, which is not great. And that actually reflects a lot of the trading that's going on in IWM, I think. So to see Urban Outfitters trading at the whim of the index and not performing as well as American Eagle fundamentally, I really am not thinking about buying the stock. I don't think it has the same value or ability to grow as American Eagle does. So what's super great about thinkorswim is it gives us a lot of data about these companies. Look at this: potential upside and downside, business summary, key trends. And let me pull up this thing that I saw about the restaurant addition of a pizza chain. Listen to this. In 2015, Urban Outfitters unveiled the acquisition of the Vetri family group of restaurants, which included the award-winning Pizzeria Vetri for an undisclosed amount. But they sell clothes. Right? Like, we can come down here and see a comparison here of what composes their company. So you can see that most of their money comes from retail. So I don't know why buying a pizza company would help them so much. In short, I am still bullish on American Eagle Outfitters, and I am in a neutral and avoid position with Urban Outfitters.